ADC Stock. This company presented their earnings earlier this week with a beat on FFO and revenue. The stock went up a decent amount because of those earnings, but on the year-to-date chart ADC is still down 8%. But people love ADC stock because of the dividend, and I understand why with dividend yield at 5% and of course the monthly payouts. If we look at the past 5 years, we see that ADC underperforms the S&P 500 big time. And keep in mind, this is including dividends. So, could this be the perfect time to buy ADC stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties net leased to industry-leading tenants. Looking at their most recent earnings report of the 23rd of April, we see that net income per share decreased 2.4%, which is not a great start, but the most important number, FFO, increased 3.5% year over year, looking pretty good to me. Dividends increased 2.9%, and with a total quarterly dividend of $0.75, we see that dividends are easily covered and payout ratio is at 75%, which is the average for REITs. Net debt to EBITDA is sitting at 4.3, which is a great number, but I wouldn't mind to see a bit higher number here in the range of 5 to 6.5 to be honest. For the full year of 2024, ADC expects to deliver an FFO per share of $4.10 to $4.13. To me, this looks pretty decent. ADC has a wide and diversified portfolio with 2,161 properties, of which grocery stores is the biggest sector, representing almost 10%. And to me this looks pretty good. The biggest sector is less than 10%. Looking at the individual tenants, we see that Walmart is the biggest with only 6%. This also looks good to me. I prefer the biggest tenant to be less than 10%. An interesting graph is the investment activity, where we see that ever since 2022 investments are decreasing, and especially that 2024 expectations aren't that high either. That is something to keep your eye on. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 5.8 billion market cap company. P/E ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 14.4, indicating they might be undervalued. Later in this video I will show you my 3 price targets for ADC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 560 million, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. We see that margins are decreasing over a longer period of time. To me, this is not a good sign, especially since there are no indicators this will change anytime soon. EPS is flat over the years. I would love to see some increases here. Analysts have mixed feelings about the EPS growth. It doesn't look too exciting to me, to be honest. For the revenue it is looking very interesting with 12% growth expectations in 2024 and 2025. From there they expect growth to slow down a bit. Return on assets is sitting at 2%, which is a low number for a REIT. Return on equity is also looking pretty low, and the most important number, return on invested capital, is sitting at only 2%, which is again a low number, even for a REIT. It is higher than the 5-year average, so that's the positive part here. Current ratio is at 0.74, which is a decent number for a REIT. Nothing special to mention here. Right now, ADC has 2.5 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 13 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is growing really nice and steady over the years. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 5.1%, which is a great number. Annual payout is at $3 and payout ratio is around 74%, which is around the 75% average for REITs. The 5-year growth rate is at 6.4%, which is a decent number, and they increased the dividend for 4 years in a row, which is really nice. In here we see the dividends paid since 2012, and to me this looks really good. ADC really likes to increase the dividends at a decent rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at the historical rate from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added M and Realty income. On the 5-year chart we see that ADC returned 7% and this is including dividends. The S&P 500 did return 88%, massively outperforming all stocks in this list. On the 1-year chart it looks pretty interesting, with the S&P 500 again beating all stocks in this list. The 3 REITs are all having significant lower returns. Only M managed to get a positive return here. On the 6-month chart it is M that is beating all stocks in this list, and also the S&P 500 by a smallest amount. Which is pretty interesting of course. ADC is sitting at the bottom of the list. On the 1-month chart it is surprisingly ADC that is having the highest return. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But most recently ADC is getting some momentum. So could this be the perfect time to buy ADC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 10, 12 and 14% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 28, 30 and 32. And for the free cash flow margin I'm putting in 70, 72 and 74. For the P/E ratio I'm putting in 20 since it is a REIT. And for the price to free cash flow I'm putting in 13, 14 and 15. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. And right now ADC stock is around $58. I hit analyze and we see a lot of green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $61. We have a mid price target of $75 and we have a high price target of $92. To me, the low to mid price target is the most justified here, indicating that this stock is undervalued. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on ADC is that I love the business. It is currently in my portfolio and with reason. The company is performing really steady and consistent in terms of growth and fundamentals. The only concern I have right now are the margins, which is of course a big thing. From a dividend point of view, things look really good with great dividend growth and a great yield. On top of that, they pay a monthly dividend, which is always interesting. From a value point of view, things look pretty good either. They are undervalued in my opinion, and this means that I keep buying ADC stock in the coming months. I think it is a great company at a great price right now. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.